Alright everyone, let's get right into it. Today, Bigbear.ai, ticker BBAI, a real roller coaster. Retail traders and institutions are watching closely. This is Bigbear.ai, AI and defense at the same time. High growth promise, high volatility risk. Here's the plan. What they do, the numbers, bulls versus bears. We'll dig into products and customers. Fast, fact first. No bias, just the facts you need. Ready? Let's slice and dice Bigbear.ai. First, what do they actually build? They build AI systems that turn messy data into decisions. Primary clients, US defense and intelligence agencies. 3 platforms, observe, orient, dominate. They sell software, services, and embedded teams. Satellites, drones, sensors, human, into one platform. Outcome, decision dominance, faster, clearer choices. Next, products, customers, and the money story. Stay with me. This company sits at 2 hot markets, AI and defense. Both give upside, and both create heavy competition. Alright, Chapter 1, right now, let's go. At its core, data-driven decision support. They build AI that ingests massive, messy feeds. Government customers use it for missions and operations. Satellites, drones, sensors, spreadsheets, and reports, all unified. Use case, track movements and changes in terrain. Use case, predict supply chain bottlenecks. Use case, flag emerging threats before they escalate. All of this relieves overwhelmed analysts and speeds decisions. Observe, ingest, clean, normalize. Orient, pattern detection, anomaly finding, predictive analytics. Dominate, dashboards, what-if sims, actionable outputs. Decision makers run scenarios and act with confidence. Bigbear formed by acquisitions of government contractors. That gives long-standing relationships and security clearances. Clients, DoD, intelligence community. Incumbency matters here. Embedded teams and integrations create high switching costs. They're pushing into logistics, manufacturing, and energy. Commercial markets massively expand total addressable market. Diversification is core to reducing government cycle risk. Think billions in government and enterprise AI spend. They embed data scientists, engineers, SMEs, not just software. That creates sticky, recurring engagements and renewals. Result, platform plus people equal sign hard to replace capability. Next, a product-level deep dive. Let's unpack the 3 product pillars. Observe collects and cleans data from any feed, satellites, drones, sensors, spreadsheets, news, unified. That reduces noise and prepares data for models. Orient is the AI brain, pattern and anomaly detection. It trains and runs models for predictions and alerts, finds correlations humans would miss. Example, predict a shipping delay before it happens. Dominate turns analytics into decisions, dashboards and sims. Users run what-if scenarios and approve plans. Commanders and executives make faster, confident moves. Decisions go from insight to action, end to end. They embed people, data scientists, engineers, SMEs. Custom deploys ensure mission fit and adoption. That creates sticky contracts and renewals. High switching costs form a durable business moat. ProModel, their modeling tool, now on AWS GovCloud. That reduces friction for agency deployment. Easier distribution could speed adoption. Cloud channels equal scalable commercial opportunity. Observe, orient, dominate. Data to decision, plus consulting and integration services. Product plus services equals sticky recurring revenue potential. Now, the numbers head into earnings. Q2 2025, released early August. Headline numbers first. Revenue, $42.5 million. A modest 3% year-over-year increase. Investors hoping for AI rockets were disappointed. Net loss, $15.2 million for the quarter, improved from $25.8 million a year earlier. That's progress toward profitability. Adjusted EBITDA also showed improvement. Key metric, backlog, contracted future revenue. Backlog reported at about $290 million. But net new bookings were lighter than some hoped. Solid existing book versus the need for big new contracts. Catalyst, ProModel now on AWS GovCloud. That eases agency access and deployment, potential channel for faster adoption. They also highlight work with the US Army and programs like Global Force Information Management. Management emphasizes disciplined, profitable growth. Focus, margin improvement, and cost control. Multi-year contracts validate technology and revenue visibility. Investors are watching bookings and cash flow closely. Takeaway, modest revenue growth, improving losses, backlog gives visibility, but new bookings and consistent profitability remain the keys. Short term, expect lumpiness tied to contract timing. Next, why bulls think this can soar. Bull point 1, entrenched position in US government. Deep relationships and security clearances are barriers to entry. Years of proven performance on mission-critical programs. Incumbency creates a real competitive moat. Bullet point 2, enormous market. Government AI budgets are growing. DoD calls AI a top modernization priority. That's a long-term tailwind for companies in the space. BBAI could capture a meaningful slice of that spending. Catalysts: AWS GovCloud partnership increases reach. Cloud distribution can accelerate commercial adoption. Landing a few major enterprise clients would be transformative. Bulls see exponential revenue upside as deployments scale. Bull point: market may be discounting long-term potential. If profitability path clears, analysts could re-rate the stock. Multi-year deals create predictable revenue. Potential re-rating could produce significant upside. Bulls point to valuable IP and specialized tech. Strategic importance to national security adds premium value. For long-term investors, risk-reward can be compelling. Summary: incumbency, TAM, cloud channels. That's the bull case. Bear point 1. Heavy reliance on a few government clients. A significant portion of revenue comes from the Army and Air Force. That concentration is a double-edged sword. Funding shifts, political cycles, or contract losses could be damaging. Bear point 2. History of net losses and cash burn. Although losses narrowed, they remain unprofitable. Higher interest rates increase scrutiny on unprofitable tech companies. If capital is needed, more equity raises could dilute shareholders. Execution risk: scaling to commercial customers is hard. Competition: Palantir, Leidos, Booz Allen, and tech giants like Microsoft and Google, plus nimble AI startups targeting niche problems. Bears question whether BBAI's tech is differentiated enough long-term. Bear point: extreme price volatility and meme stock interest. Hype-driven swings can disconnect price from fundamentals. Speculative moves can create sudden downside risk. For risk-averse investors, that volatility is a major concern. Bears argue today's valuation still prices aggressive growth. Single-digit growth and persistent losses don't guarantee that future. Fail to execute and downside could be material. Now, what analysts actually say? Analyst coverage is mixed, cautiously optimistic overall. William Blair, hold. TD Cowen, outperform. Cantor Fitzgerald, neutral. Consensus sits around hold, moderate buy. Price targets have a wide spread. Some show big upside, others are conservative. H.C. Wainwright remains positive, noting IP value and strategic importance. Common analyst themes: long-term opportunity versus execution risk. We want to see consistent wins and cash flow. A frequent refrain. Wall Street is divided. Both cases have credible support. This is the view as of August 24, 2025. Analysts are watching bookings, backlog conversion, and cash flow. Now, your move. Summary: Bigbear.ai. Powerful tech, government foothold, commercial upside, and real risks. Potential versus performance. It's a classic trade-off. Watch bookings, backlog conversion, multi-year wins, cloud adoption, and profitability. Thanks so much for watching. I appreciate your time. Tell me, are you a bull or a bear on BBAI? Drop your case below. If this was useful, hit like and subscribe for more fact-first breakdowns. Thanks again. See you next video.